My name's Dave Dubeau, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content.
Hey folks, have you ever taken a look at one of those luxury sky-rise buildings, apartment buildings, going, gee whiz, I wish I could get involved in one of those kind of projects? Well, today's special guest, Dana Rowan, has done exactly that. He's been in the real estate space, not for a few years, but for multiple decades. He's been very, very involved in this, and he's been doing a lot with ground-up development. So zooming in from Boston, Massachusetts, welcome, Dana.
Hey, David, how are you? It's a pleasure to be joining you today.
I am great. So, Dana, let's just get started. Big picture-wise, what do you do when we talk about ground-up development? What do you focus on primarily these days as of 2025?
Well, we're in an interesting part of the cycle right now. So I have chosen to spend most of my time in two ways. One, looking at ground up or substantial redevelopment, high value add projects to invest my firm's capital and then possibly co-invest it with joint venture partners. I also advise or engage myself in some special projects to raise capital for projects that are well and are very close to getting ready to be put under construction. So they're ready. They're almost shovel ready, except for maybe final capitalization. And so I'll help these leading best of breed developers raise the final equity that is required for the projects.
Okay, so what have you got going on the go currently these days? How many different developments or projects are you actively involved in?
I am actively involved with three projects right now. The one that you mentioned, sort of parenthetically in Florida, is consuming most of my time right now. It's a 52-story luxury high-rise condominium project in the North Bay Village submarket of the Miami area. It's very close to South Beach. It's very close to the downtown of Miami, the Brickell sort of area, as a lot of people refer to it. And it's waterfront. It's on 4 acres. It's the second tower of a 2-tower planned development. And the luxury units will range from roughly 1,500 square feet up to 4,000 square feet. And as you know, the cost per square foot of luxury product has gone up rather significantly over the past 3 to 4 years, and it's now pushing $3,000 to $4,000 a square foot for the highest end finish out.
Holy smokes! So, what's your involvement in this project, Dana?
I'm raising what they call pref equity.
For those that aren't familiar with that, what does that mean?
It's preferred equity that has some aspects of what you might consider to be debt, but it's much higher coupon. And it's the beneficiary of cash flows that are generated as opposed to a monthly obligation like a construction financing might involve. And when we're talking high yield, this is a 20% per annum coupon, and it's going to be out for roughly 4, possibly 5 years, but more likely 4 years.
Okay, so dumb question. How does it work? So like, is the building finished or is it just in process? At what stage?
No, this is pref equity for construction.
Okay, so construction, there's one tower already, you're starting to build the other one.
And this is a for sale unit, luxury condominium tower. Mm-hmm. So the exit is basically the sale of all the units.
Okay.
By the developer. And
so when you say 20% annual, it's not cash on cash each year. It's at the end of the project. Am I
Correct.
Okay, good. So you're
The alternative to that structure, which the developer is very willing to discuss and would treat equally attractive, is a $10 million co-investment position pari passu. That means the same terms under which the sponsored developer is participating as an equity investor. And to be a little bit more specific, we're looking for $10 million in roughly two $5 million units, or a straight $10 million investment pari passu, shoulder to shoulder with the sponsor developer who's putting in $65 million. So this is a smaller piece of the total equity required. And I'll just mention that Cushman & Wakefield right now is sourcing the debt nationally and has had overwhelming response from the market. 30 institutional investors have been chasing this deal, and they're getting that down from 10 to about 3 finalists. And that should all take place in the next, I'd say, 3 to 4 weeks.
So really, you don't need any more capital for this deal. It sounds like it's
not yet. The equity I would welcome. And we're having discussions right now with 4 or 5.
Yeah.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com.
Okay, so you're involved with raising capital for this project. What other kind of projects are you involved in as of 2025, Dana?
Well, I've been looking at a couple of repositioning opportunities. One involves a transit-oriented development in the North Shore of Boston, where there's an opportunity to have a co-located multifamily apartment building built right next to one of the subway stations just immediately north of Boston in the city of Lynn. I'm also looking at several other multifamily development opportunities that are largely infill, what I would call smaller sized projects, less than 50 units. However, I had another deal brought to me this past month that is a little bit larger than 100 units. But I find that the sort of the smaller infill residential development projects are easier to get built. There's less pushback from neighborhood or political entities, and there's of course a strong desire to build more residential in quite a few markets where there's a very tight market, and it's actually impairing economic development and growth for these metropolitan areas. So they are eager to see something get built.
So Dana, I guess your primary role with a lot of this is helping to raise the capital for these projects. Would that be fair to say? Or are you also analyzing deals and kind of?
Well, when it comes to prospecting some of the projects that I'm looking at now in the Northeast, these would be, where I would basically be participating as a sponsor developer, either individually or in a joint venture capacity.
Got it. So sounds like you got a ton of experience raising capital, especially from larger type investors. I know a lot of our listeners and viewers are getting into capital raising. Knowing what you know now, what advice would you have for newer capital raisers about, especially raising money in today's environment?
Well, I think that, you can save yourself a lot of time if you do what I would call a quick and dirty assessment of just the economics of your deal. A lot of deals right now are being pursued, but ultimately when they finally pencil it all out, do a spreadsheet, do sources and uses for the capitalization and uses of the funds and the projects, finally have budgets that have some reality to them.
Yeah.
Most people are finding that the cost of construction exceeds the economic value of the project when it's finally being delivered, which means it's upside down.
Yeah.
And
it costs more to build it than what you can sell it for.
More to build it. Yeah.
Yeah.
It does, in terms of its delivery value.
Yeah.
It's either fully stabilized or fully sold if it's condominium product or other for sale product.
Okay. So yeah, make sure your numbers make sense. And then what other advice do you have for people who are just getting started with raising capital?
Well, I would, part of the real estate development game is getting things done, and that means getting it entitled and then building a good team. So in terms of entitlement, it helps if you already have a good sense of the political community in which you're developing. Either have access to political leaders who can give you insight, or planning departments and zoning departments can save you a lot of time. The other is, when it comes to, finding deals, it's a lot easier to search in markets where you already have a good feel for, the price of existing product, and all of the assumptions that go into underwriting a deal when you're figure out, whether it makes sense.
So we were talking a little bit off camera before we started the interview about your recent trip to Chicago. Maybe tell people about that, because it sounds like you were quite impressed.
Sure. Well, I just came back from Detroit.
I thought it was Chicago. Sorry. I
just came back from Detroit from a national meeting, the Counselors of Real Estate, which I'm a member of. And these basically are individuals that are at the top of their game. A lot of them have 30 to 40 years of experience, but we chose to meet there because we were very impressed with the redevelopment activity that's occurred in the city over the past 10 years. As you know, in Detroit, Rocket Mortgage, which is now a nationally renowned mortgage provider across the U.S., was founded and has expanded dramatically in the city of Detroit. And that capital that has accrued over these 10 years has been reinvested in the city in the form of redevelopment all over the city. And we're talking about brand new buildings that have gone up block after block after block, plus a sort of a master planned thought process in terms of really rejuvenating, creating a beautiful urban landscape out of what had been very tired, run down, beautiful buildings, but not in the best shape, spruced up, rejuvenated, restored, and then complemented by beautiful brand new buildings that are built, side by side with them in infill locations.
Nice. That's exciting. So what do you see coming down the pipeline for 2026 for you, Dana?
Well, what I see is probably the areas that are going to be more active are multifamily development. I also think that for urban areas and what I would call the high streets of cities across the country, retail has come back in a significant way, and is providing very nice returns. We've gone through now a sustained period of considerable growth since coming out of COVID, and that's generating high occupancies and high room rates in a lot of cities across the country in the hospitality world. And so hotel development, I think, is once again, underserved right now, and will be an area of focus for a number of individuals who are looking for opportunity. And as you know, most of the hotel development in the country is franchise-based by local developers that have national flags associated with their projects. And then finally, industrial, just continues to be a hot product. The rents have risen quite a bit because of the distribution requirements of all of this online ordering. to get goods to your front door within 20.
My Amazon stuff ASAP. Yep.
Yeah. So that's and they're right now, a lot of these online companies are rethinking their distribution models because they're being really compelled to deliver products faster and faster from the point of ordering.
Right.
And the best way to do that is to co-locate industrial warehouse facilities right on the edge of the city, so they can get that product to a consumer within 24 hours.
Yeah, that's crazy. It's amazing. Interesting stuff, Dana. Well, hey, if people would like to connect with you and continue the conversation, how can they best do that?
Well, if you want to reach me, I am always available at my email address, and I will give that out. It's D, my first initial, my first name, and then Rowan, Rowan, and then it's Exeter, EXETER -realty.com. And then also you'll find me under my name, Dana Rowan, on LinkedIn, which is by far my most active professional platform that I use.
That's the Dana Rowan in Boston, Massachusetts.
Correct.
That's the one. Dana, thanks for being on the show.
Sure. My pleasure, Dave.
All right, everybody, take care. See ya on the next one.
Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.